Welcome to JGL Law for You. This podcast is sponsored by Joseph Greenwald and Laake, a suburban Maryland law firm that has been representing clients throughout the D.C. metropolitan area and across the country for close to 50 years. JGL Law for You is a podcast by lawyers, yes, but not for lawyers only. On JGL Law for You, we will bring you up close and personal with our lawyers and some special guests who will be discussing how to navigate the many legal processes, developments in the law, other current events, and how they may affect you, your family, or your business. Today we're talking to Michael Loftus, a graduate of Villanova University. Michael started Loftus Wealth Strategies, a boutique financial advisory firm, in 2010. Before then, he spent several years working on the institutional side of the financial world, where he was responsible for managing the finances of multi-billion-dollar organizations. Although in a small firm now, Michael serves clients across the United States. Michael, thanks for joining us today. Looking forward to talking to you.
Good morning. Thanks for the opportunity.
So let's start right out with a couple of big issues that I know that are on people's minds, and let's deal with the pandemic first. And I got a lot of questions for you in this regard as the COVID relates to the investment world and so forth. So if we could, let's turn the clock back 9 or 10 months ago and tell our listeners, if you would, how the beginning impact of COVID affected what you did in terms of financial planning, both for your individual clients and corporate clients.
Well, I think first off, it was such an unknown, and I don't normally use this word, but with our clients, it was panic because nobody knew what was going on. Ironically, early in the year, I had reviewed a book about China, was talking about it, and unbeknownst to us, this came about, this virus, but people were really concerned. The unknown is part of investing. There are some unknowns, but you try and manage those risks. But this was a risk that we just couldn't manage because we had no idea what it was about at that time.
I mean, I'm sure you have older folks, or where their parents or grandparents probably still tell stories of the crash back in to kick off the Depression almost 190 years or so ago now. This must have scared them to death.
Oh, there's no question. I mean, when you've got the majority of my clients are retired, and I have retirement accounts with businesses, as you mentioned, but this is their lifestyle money. This is their opportunity money. And all of a sudden, you have a market, that went to, all-time highs at that time to a crash, right? And it was a very quick crash. It wasn't a long one that we've seen in 2001 or 2008-9. It was, relatively overnight.
So once it was upon us, right, and this sort of mystery or panic was sort of permeating folks who are fortunate enough to have money in the market or have money in savings or wherever else. What, if anything, did you do in terms of strategy or pivoting in terms of your advice? Again, we can talk about businesses because we've got a lot of business owners that listen in, but individuals as well.
Yeah, I mean, I think that like any advisor, we have a process that we adhere to, no matter what is thrown at us. So, in particular at that time, we were in what's called cycle 3. And there are some asset classes that do well there, which are treasuries, gold, and those are things you think about for a little more safety. We had also seen some signals. I'm not your traditional buy and hold. If I see those signals throughout our process, then we will raise cash. And we at that time were very fortunate to reduce some of those losses by 60-70% by raising cash, going more to bonds, and being patient till we had a better idea where we were going. So again, part of our process is, to find opportunities as we're going up and to hopefully minimize that risk when we see things going down, even albeit as quickly as that was.
And for those of us who are sort of lay people listening, when you say cycle 3, tell us what that means, what the other cycles are.
Well, I mean, it's like the 4 seasons, right?
Not the singing group, I assume.
Yeah, exactly. So when you look at different cycles, okay, so in actually fourth quarter of 2018, we moved into what I call cycle 3. So what happens at that time, growth was slowing. And keep in mind, pre this pandemic, we had been at a very extended bull market. And we were seeing that growth was starting to slow. Inflation decelerates, the Fed becomes dovish, and we see some deflation. So we had already seen that and had been positioning our assets. Okay, so that was cycle 3. Now we have since transitioned to what's called cycle 2. Okay, cycle 2 to us is when growth accelerates. Now, a lot of people hear that and they're surprised because, we've got Wall Street and Main Street with two different pictures or two different shows being shown right now. But the fact is the growth is accelerating when you look at GDP. First quarter of this year, we're looking at the biggest growth in GDP in 70 years. And that's what the market wants to see. Okay, so we are growing. Inflation accelerates. Now, the Fed doesn't say that, but we all know, having built this, lumber's going up, sugar, we're seeing inflation everywhere, okay? And we utilize that to position our asset classes. The Feds are neutral right now, okay? So, and each of those cycles will allow us to change some of our allocations. Some we always hold. Cycle 1 is the Goldilocks, right? That's when everything's going well, where we're not only growing, but inflation decelerates. Haven't seen that one in a while. And then cycle 4 is the worst cycle, okay? We were seeing signs of that last year, very close to it, but we were able to find a bottom from an economic standpoint, not talking stock market now, where we started growing again globally. Not just in the U.S. So that allows us to make changes.
Now, with what we hope, obviously, is light at the end of this pandemic tunnel, I guess. What do you see in terms of what's coming down the pike as more people begin, I guess, to get vaccinated, more people maybe become more confident in terms of being able to go outside, do things? What do you see for your industry as that starts to happen?
Well, I think first off, right now, we are again in growth mode, which is cycle 2. So based on our research that we pay for, we do ourselves, we're looking at the next 2 quarters to be fairly strong, regardless of COVID. And then we anticipate a slower down as we head towards third quarter and possible cycle 4 slowdown type elements. But we have to be aware that, yes, right now, I'm seeing some really good opportunities, especially at the beginning of the year, getting a little frothy. But this is the most expensive market in history. Now, you don't say that often, right? You can go back to the 29 crash when PE, price earnings, okay, how we determine the risk of the market and how expensive it is, was at 35. 2000, we were at 34. Today, we're at 38. So that is grossly overbought. This market has gone so far, okay? And obviously, a lot of that has been driven by the Fed intervention and what flooding the market. And we know the new administration's coming out big with, another $2 billion. The last administration put $7 trillion into our deficit. And that's an issue we can discuss as well. So, I think we have to see. I think the world has changed. Commercial real estate, I know speaking with some CEOs and friends around the country, they're looking to reduce their footprint in real estate 30-40%. I did that recently. So that's something you have to look at. You look at housing. Housing for the haves has gone through the roof. Have-nots, you get 18 million people unemployed, so we should see something happen there. So, we also saw last week, retail report was pretty weak. Obviously, people are at home, and same with consumer confidence. So, we still have a long way to go. When you've got 18 million people unemployed, still another million were added last week, it's going to take a while to digest that and get it back into the economy. So, yes, everything I see now, short term, meaning this quarter, next quarter, looks good. But then eventually we haven't had a correction I'm going to call last February, March a flash crash in quite some time. So I think it's to be determined, really. Short term, I see growth, but we're a ways away to getting back to the normal we were used to prior to this.
If you're talking to a small company, a mom and pop shop, or a couple that's looking to try to figure out how to allocate their resources in terms of whether inside or outside the market, what do you without giving away any trade secrets, obviously, what are you telling that small business or those individuals who don't have multiple millions of dollars that they can afford to see be reduced in terms of value?
Well, I think one question I get asked very often is about real estate. That's from the business owner and also from individuals. My individuals, I'm telling them, now's not the time because sure, you might be able to sell your house at a great number, but you're buying a house at an even greater number. And that market has moved so fast. On the commercial business side, just speaking for myself, I was ready to buy a building. Everything was done, but quite frankly, I think we're going to see a little bit of a commercial real estate reset because of what I discussed, right? I think there's going to be a better opportunity to buy real estate down the road for business owners versus today. Outside of that, so let's go to the business owners. Mm-hmm. Depends on your business, right? My wife owns a retail place. It's a tough year. You can't make back 3 months of lost revenue. Okay, so you've got that client who is trying to stay afloat. Okay, and then you have some others, the restaurants that I work with, same thing, have nots. The bigger restaurants, quite frankly, with the capital, were able to adjust, create outdoor seating, heating now, etc. And most of those have done fairly well. It's the small mom and pops that have really hurt. Mm-hmm. So I think right now, cash. I've got a decent amount of cash right now in our portfolios. Cash is, something we have to think about. Now, the problem is you're not making money on cash right now because the Federal Reserve moving things down. So I think that short term, real estate's the number one question, and I can get into investments if you'd like me.
I'd like you to talk about that just a little bit, because I do think that, especially for our people that are listening, and a lot of them are individual investors or, not Boeing and IBM and those size folks, and they'd probably be interested to hear what advice you may have, generally speaking, for what to be looking for, and maybe what to look to stay away from an investment perspective over the next 3 to 9 months, 3 to 12 months. I'm going to ask you a little bit about the debt and the new administration and so forth as well, but just focus on that part for a second. That might be helpful.
Yeah, so going back to real estate real quick, my last job in corporate, I was head of capital markets for a REIT company out of New York City, which was a real estate investment trust. So my knowledge on real estate is pretty strong on the commercial side of things. So I make that determination based on a lot of different factors. So again, you heard me there. From an investment standpoint, when I look at where we are in the cycles, there's a couple things that stand out. So, one is growth. So, year to date, the S&P is only up 1%. And I tell everyone all the time, the market is way more than the S&P. Okay, so when you look at what's happening right now, let's talk about the bond market. So for the first time in years, okay, we are now seeing interest rates on bonds going up. So yields go up, prices go down. So you're losing money in bonds right now if you're holding treasuries. Cycle before, 20% of my holdings were in treasuries. Now I have zero. Okay, same with gold. I don't own gold right now. So instead of that, if interest rates are going to go up, who benefits? Banks. Okay, so there's been some good opportunities. We're seeing earnings coming out right now. So that's one of my key holdings in this cycle. If we're growing, what do we look at? I would look at materials, consumer discretion. Okay. And then let's talk about one of the biggest issues, and Janet Yellen brought this up. She talked about she wants to bring back the dollar. Okay, the strength of the dollar. Well, guess what? The Fed is the one who has destroyed the dollar. The dollar has crashed from its cycle high. I mean, that's the only way you can look at it. So what happens is the reason inflation's up is because dollar's down. So where's your opportunity there? Oil. Okay. We were early, got into oil. Again, when we saw the cycle shift, I still think there's a way to go in oil. And you have three different ways you can do that. Oil companies, which we have, the price of oil, or MLPs, Master Limited Partnerships. So those are really good opportunities right now. And then I'm trying to look through my list here, what else I've got. Not getting ahead about the new administration, but, again, seeing what was happening back in November, we made our biggest allocation to the marijuana industry. Okay. I think that we are in the infancy of that industry. I know you chuckle, but I've been watching this for a while. It's done nothing. Even before the election, you had some Republicans were getting more open-minded about it. And then with this new administration, this is one of their top tier things. So we went pretty heavy in marijuana. Funny, I saw an article yesterday. Is it time to start buying marijuana? We got in. We've taken profits twice already since November because it's gone up so much. So it's taking a pause right now. But I think, again, that's a generational opportunity. So that's another place. And then I can talk about the new administration.
Well, I just say I chuckle because people are at home, and aside from you start to run out of vices. So I'm assuming we turn from smoking and alcohol, whatever else people might have, and marijuana could be next on the hit parade. But talk to me a little bit about the recent political events and in terms of what happened at the Capitol building a couple of weeks ago. And so that folks are listening, we're taping this episode on the day of Joe Biden's inauguration. So looking back 2 weeks ago, is there any impact on the market, or that you perceive to be on the market? Any impact on how you're looking at things based upon whatever you call it, whatever you want to call it, and to be apolitical, something bad happened. Let's leave it at that at the Capitol building 2 weeks ago. Is there any concern from an investment perspective, or any discussions from your clients or your folks as to how that might affect what they have?
Yeah, so I think that, again, for me, sticking to our process, right? And you hear that, I'm definitely outside the box. I'm not buying your typical asset classes. I mean, sure, I own tech, of course, large cap growth. There's no doubt that's a core holding for me. But, I look at the process. I look at rate of change with all this data, and I stick to that. The event a couple weeks did not affect the market. Okay. I think there was a little bit of a pause. We've seen a flatness until yesterday. We did I did a webinar with our clients yesterday. There's questions about, some of the things going on, but
sure.
You have the extremes that say they're worried about an event, and these are things from a financial standpoint. Again, when I try and manage risk, right, you talk about non-correlated assets. So the dollar's not correlated to oil, right? That's why I have it. Those kind of political risk, geopolitical risk are very difficult to manage because they happen like that, right? You just don't know how to do that. Yeah. But I didn't get any questions on my call yesterday. To me, that has been, again, from an investment standpoint, like you said, it was a non-event. I've stuck to, what I'm doing. Now, with the new administration, I definitely started changing and adding things that I've never bought before because of the new administration.
Why?
Well, because of their policies, right? So there's three policies that Joe Biden has come out with so far. And number one is the marijuana, is getting that legalized. There's some specific rules of that. I won't get into it. And obviously that was a good move. Green energy. I've never owned green energy. Now I've got a small piece right now. I started buying that. And then 5G. So those are three things that the administration has spoken about specifically, where 5G is a different thing. We know about that, but I never had marijuana in my portfolios, and you can buy individual stocks or indexes there. Nor have I ever had green energy. Well, now I look at my charts over here, and I've got 15 green energy. I've got 22 marijuana stocks and 8 5G stocks that I look at every day to see if there's an opportunity or if it's time to buy.
Understood. Interesting. So let's say an individual walks in your office. Let's personalize it just a little bit. Context, no one's walking in your office too much these days, I don't imagine. But but contacts you, contacts you and says, okay, I've got X, Y, or Z. I'm looking to move my portfolio. How do you what questions do you ask? What do you look for when you're talking to that potential client?
Well, I mean, everyone's different, right? So, as we go through, there's two parts of our business, which is the money management aspect, which is really what we've spoken about, and then the financial planning aspect, right? And financial planning is, we talk about income, we talk about passing those assets on efficiently, we talk about estate planning, all of those type of things. So, the most important thing is, then you got to find out, okay, do you have a pension? Of course, we're seeing less and less in that, especially our generation, right? Have they started Social Security, not Social Security? And at the end of the day, a financial plan is as simple as money in, money out, surplus, deficit. Okay. And then from there, we create the plan to get the income that's needed. If they're going to pass it on, how do we grow it and then pass it efficiently? So we kind of set it up from there. We want to know about their experience, how involved they are. Obviously risk is very important. How much risk are they willing to take? And this is now folks that have been through 2000 and 2008 and then last year. So they've had three major corrections in a short period of time. So I think that's number one. And then number two is setting expectation. So I think one of the biggest problems we hear from the press all the time and big TV is, this concept of a 7% return, which really is not the case. Okay. I'll go back to 1929 because I have the chart. Every year, if we average 7% a year, the S&P would be like 150,000. Okay. So that's just not true. If you go to 2000 to last year, we've averaged about 4.5%. Okay, because you have ups and downs.
Right.
Okay, obviously, right? Sure, you make money, and everyone says buy and hold, but then you lose 35%, even if you were in a 60-40 portfolio in 2008. So, we talk about those expectations, and then we get into our process of how we manage money. We'll manage risk on the downside. I don't have a problem raising cash, being proactive. And then if it's a good market like now, I might be more than their normal 60% in equities. I might go 65, 68, which I was up until last Thursday.
Now, you mentioned estate planning. So let's talk a little bit about how you interface with a client's estate planning lawyer, trust lawyer. What goes on in terms of the back and forth between you and let's say I come to your office, we're talking about putting an estate plan together. I've got a lawyer who's helping me with my estate plan. You're handling the investments. Tell me about how that interaction works and you're working with a lawyer.
To me, I'm not a lawyer, obviously, but, I've looked at hundreds of trust documents and have been through, of course, when people pass and what needs to be done. So, the first thing I do is, I talk about, the importance of a trust if they need it. And that depends on a couple factors. One, how many assets they have. Okay. Number two, if all assets are in an IRA, there's reasons why not to put it into a trust. Now, rules have changed, okay, quite a bit. And we also have a new administration. So we're a little bit in flux right now. So we had one of the best opportunities with IRAs, which was called a decedent IRA, where you could continue it on for a generation, right? Which was awesome. That loophole was closed last year. So now when you inherit an IRA, you only have 10 years. So not sure if you need to put that in the trust. You can name the trust as a beneficiary if there's concerns about the kids spending their money, et cetera, how it goes. Those are things you can do. It just depends on the child, and those are the tough questions I have to ask sometimes. And, there's one child that's good. There's one that isn't. You've been through this, I'm sure, right?
Sure.
So, I go through that, and then we talk about why I trust, right? Avoiding probate, the privacy factor of it, probate meaning cost, okay? And also when you do, it goes online and anyone can look up your private business. The main thing is control, right? Control from your grave so the kids don't, quote unquote, blow the money.
Right.
And some people say, hey, we're going to give it to them, let them do what they want to do. And that's their choice. don't always agree with that, but and that's smart, especially nowadays when it's a litigious society, and you want to have your home in a trust, any assets outside of your IRA, so non-IRA, 401k type assets, etc. So it's all about putting it all together. So when the day comes, it can be transferred efficiently and tax efficiently as well.
So it's not unusual for you to talk with a client's if that client has a lawyer that's working on his or her estate planning. That's something that you do with some regularity, I assume.
Without question. As soon as somebody comes in and I meet with them, if they're new, like you, we all take notes. As soon as I'm done with those notes, I'll send that to a lawyer that I work with and say, look, here's who here's the couple I just met with. Here's what I see from my experience. I think that this would probably be a good way to go. But of course, I'll wait for you to make the right recommendations, and then just make sure when you're done, get me back the paperwork, because we do need that on file.
Right. Now, what other occasions do you find yourself involved with clients' counsel, with clients' lawyers, other than when it comes to estate planning?
That's the main thing. Obviously, also, estate planning is the main thing. Now, I do have some clients that have. I've got a client that owns 38 properties, right?
Right.
I've got a client that owns 6 well-known restaurants. Okay, so when you're dealing with a client like that, I'm one part of the team, right? You've got the accountant, you've got the investment guy, you've got the lawyer. Okay, so all of those should work. They should work hand in hand to help the client meet their best objective.
All right, Michael, I think we could probably talk for about 7 or 8 more hours without any problem. I want to thank you so much for coming aboard today. I know you're very active on YouTube and social media. Let folks know the best way to find your videos on YouTube, to find you on social media, and if they want to contact you, what's the best way for them to reach out and get hold of you?
Yeah, obviously, I am based in Bethany Beach, Delaware. My phone number here is 302-251-8901. I definitively have clients around the country, but Mid-Atlantic is my sweet spot. I grew up in the Philadelphia area. I lived in Maryland. A lot of my clients come from Northern Virginia, Maryland, D.C. down here. So, I definitely work the Mid-Atlantic area. Our website, lwsde.com. And then the easiest way to find me on YouTube is just do a search for Wealth and Wisdom TV. Very fortunate. We've got over 20,000 subscribers. I do a market update every 2 weeks, and then I'll do educational videos on the off week. And I have a new series I just launched called Straight Talk.
Very cool. Michael, again, thanks so much for being here today. I want to thank everyone out there for joining us. Look forward to seeing you on our next episode. I am David Bullitt, and this is JGL Law for You.